Let's get across the market open. Marcus Padley joining us on Marcus today. Marcus, welcome back. Good to see you. Let's begin with perhaps the biggest mover overnight being in precious metals, gold, silver, plunging. What are your observations?
Look, there is so much chatter about gold at the moment. Everybody can list you 10 reasons why gold has gone up. Indian seasonal buying, central bank buying, and all of that's been iced with it has been iced by the media, a retail frenzy. You see those queues of people queuing outside the ABC bullion offices in Martin Place in Sydney. Just blows your mind that the gold price goes up 50%, 59% in this year. And now people are queuing up to buy it. It's got to go wrong, hasn't it? Anyway, so overnight you'll see it's down 5%, over 5%, worst session since 2013. And it was always going to stop abruptly. It's not that big a deal though overnight. Got to say, a 5.7% fall when it was up 3.7% the day before. It's not that big a thing, and many people will hang on to their faith in gold, but it's not about the gold, it's not about the gold price, it's not about the store of value, it's not about all the other stuff that everybody wheels out to support the gold price. It's about a herd doing 200 miles an hour with its hair on fire, and it's got to stop at some point. It looks like it could have stopped overnight. If you look at technically on the charts, you'd be selling it now. It's been overbought in the whole of this run since August. It's been overbought, and this is the first technical on the charts sell signal. So I think if we were holding the gold ETF, we'd be selling today. Unfortunately, we don't hold it. We sold it back in June. Oh, anyway.
Yeah. Well, it's timing, isn't it, Marcus? But so you're thinking this is more likely not so much a consolidation phase, but we are going to see a significant pullback then.
I think there's every chance. No one knows, can't predict anything, Andrew. But all I would say is that the whole of investment is not about talking about what you're investing in. The whole of investment is talking about how much risk you're taking. You're taking a lot of risk now in gold. So
yep.
I wouldn't predict a sharp pullback, but you can only do what you do, right? Or no, you do what each individual can only do what they see fit. And on my risk scale, it's got too risky. So, yeah, I'd be out at this point. But everyone else can do what they like. You just have to look after yourself.
All right. Well, speaking of mitigating risk then, Marcus, I noticed that you have gone 100% cash. What is going on? What are you seeing right now? We have had a fabulous run in big tech this year. We started our fund in February. It's got $70 million in it now. From zero. We made a 20.26% return in 8 months. Our target is 20% per annum. So we have hit target in 8 months. The market is clearly, the Nasdaq, which has been our theme, has been big tech, has got itself overbought, and there are plenty of risks ahead. And the biggest one for us is the results season for big tech. And I notice overnight, not that Texas Instruments and Netflix are two of the big tech stocks, they're more mid-tech, but Texas Instruments has just had results. I think they're down about 8%, and Netflix down 6.6% after hours on their results as well. So not the best start, but they're not the big tech stocks. We've got to wait till Wednesday next week. But this is now a risk because we're now in the hands of a herd. We're not in the hands of fundamentals. Everybody knows it's overbought. And our feeling is that when everybody from the taxi drivers to kings and queens are asking the same question, which is when is the market going to top out? And something's coming. When everybody's talking the same line, something's going to come along. We felt when the market dropped over 3% in a night last Friday, a week ago, that was very similar to, if you go back to December 18, we'd had a long bull run and the market fell 3.5% in a night. That marked the top for a while. And we think that looks like last Friday with the Trump tweet, even though the tweet was irrelevant, but the sharp drop in the market has pulled everybody up. And that's a sign for us that let's just lock it in. Thank the Lord, we've had a fantastic year so far. All our investors are super happy. Let's just lock it in and let everyone else worry about what happens from here. And as you can tell, everybody's debating whether it's the top of the market or not. There are all sorts of risks ahead. Time for, we don't care what everyone else is doing. We have the ability to go to cash. We've stepped out, locked in 20%. Let's just watch and wait. We're now we've got another 4 months of this year, and we don't have to do anything. So let's just we've got our 20%. So let's just wait for an irresistible buying opportunity, which I think will come from this state of overbought bubble talk, and with all the risks ahead. So we're just stepping out. And the results season for us, one, it's so fragile now. The sentiment's so good towards big tech. There are all these circular deals which are a bit vacuous. No one's talking about what return on investment they're getting. Any hesitation on AI capex, and this whole thing's going to cascade and provide us with a great opportunity to get stuck in again. So we're just hoping that happens. And cash is king. We're taking no risk. We'll watch everybody else run around with their hair on fire, wondering when it's going to end. We'll just pick up the pieces.
Well, I'm sure you can enjoy the next few months sitting on the beach watching all that unfold then, Marcus.
Actually, Andrew, it's very stressful. You would think we'd sleep at night because we're taking no risk, but we're constantly fear of looking like idiots. So it's far more stressful. I'm up in the middle of the night.
Yeah.
But that's okay. That's what we're paid for.
Indeed. But look, beyond perhaps a severe market correction that may well be coming, that you think it's got to come at some point. What about, and you've spoken about this before, something much larger, and obviously addressing, and this is why in part we saw that gold begin to run, was something of a new global financial crisis.
Yeah, well, let me just say there are people who are very fearful for their generational wealth getting wiped by a debt implosion in the US. This is, the one event in your life could wipe out decades of wealth building if you've got your money in the wrong place, and Trump absolutely cocks it up and causes the US to lose control of the bond market, and the US dollar collapses. US bond market seizes up, and it would be 10 times the 2008 global financial crisis. And even if it's a tiny weeny risk of it, some people are thinking of doing something about it. One of the reasons gold's probably doing what it's doing. It's one of the reasons presumably the Chinese are buying gold, because they are trying to de-dollarize themselves and set up an Eastern Bloc Asian currency, which has got to have something behind it, and they're a bit short on gold assets. What do you buy? Yeah. Well, just imagine, this might sound really stupid to you, and don't want to set everyone off on in a firestorm, but just imagine if it did happen, where's all your money sitting? And last thing you want is debt. But if you've got money, what about the viability of Australian banks? I won't name any names, but almost everybody's got a cash management account in the same bank, which is an investment bank, which are at the front line of the global financial crisis in 2008. If you've got everything in there, you're in trouble. So hence you can see people looking for other safe havens, and just have a look at the Swiss franc, which is not in the euro. It is the classic safe haven. The Swiss franc is going extremely well alongside gold. Someone is doing something, prepping for something, and it could be the big one. We're going to get a lot of warning signs before it happens. It's years away probably, but even a remote possibility has got people doing some pre-planning now.
All right. Well, I don't know that I'm going to have a good night's sleep after what you've just told me, but
No, don't. Where it comes from, if you have a look at Ray Dalio's book, How Countries Go Broke, there's an 80-year debt cycle, and we're in year 80 for the US. So that's where it comes from.